Hey, this is Danielle, and today I'm going to be talking about Tesla and the post earnings opportunity that I see right here now in this stock. Now, first of all, I just want to start off by saying that, I went into earnings bullish. I was expecting an EPS beat. We did get an EPS beat. They were estimated to earn 69 cents a quarter. They ended up making 91 cents a quarter. However, what happened was we saw a negative earnings reaction. Now, this happens a lot of times, when a stock has already traded higher going into earnings. And it also happens a lot with Tesla just because, I don't know, for whatever reason, people just love to tear down Tesla, the plans and ideas they have going forward. And, even with a nice EPS beat, we can see a downward move. Now, in this case, and in any case, when I'm bullish on a stock and they, trade lower after earnings, the first thing that I want to do is identify pullback zones, okay? I want to start off by calculating what was the market maker expected move. Okay. In this case, the market maker expected move in Tesla was $20. When they first fell, $11.70, that really wasn't a big deal because it was half almost of what the market makers priced in. Now, as the day went on, it did end up falling more. It was down, I think, maybe 27 at one point, and then it fell again the day after that, and then the day after that. So when this kind of thing happens, you say, well, first of all, was it more than the expected move? Well, yeah, I mean, not initially, but then it kept falling. So it's really not a good sign for the stock. But what you want to do is you want to identify support zones on the way down. And then you want to see if you have a trigger with that support zone so that you can then get an entry going back on up to the upside. Because I don't know, when you're looking at a bullish stock, which I mean, in my opinion, Tesla is a very bullish stock, and they get hit like this, the most important thing to do is look for another entry where you can get in the direction of the trend. And that trend is, up. So when we're looking at Tesla, I first had a level right here around 265, 270. That zone was broken. When you're using Fibonacci analysis, which that is what I use, by the way, Fibonacci analysis, what you're doing is you're just basically projecting support zones based off of previous swings. And you're saying, hey, Tesla's done this before. If it does it again, where is that going to bring us to? And you're looking for price patterns in that way. But the zones have to be tested and they have to hold, and then they need to trigger higher if you want to use them. If they just break on the way down, it's obviously not support, right? So 270 broke, that one got erased. My next lower zones were right here at 250, and then I have another zone here between 240 and 244. Now, what ended up happening today was that Tesla had some news coming out that they're going to be investing in India, and they're going to be coming out with a $24,000 model. Now, Tesla is, great stock to trade when it moves in the news. That can really be a catalyst for this thing to get going, and that is exactly what happened in this case. And we have Tesla ending the day up 269, which is 3.48%. So when you're looking at this here, what that means is that you have a Fibonacci zone, which was also overlapped with a 34 EMA. It's a pretty critical area on the daily chart there that has held, and voila, it triggered as well. Now you may ask, well, what is a trigger? Well, a trigger is just a reason for you to believe that that zone is solid and that zone is holding. So if you go down to a lower time frame chart, you can see it a little bit better. We have the colors of the candles shifting from red to yellow to green. That is one trigger. Those are my trend strength turbo candles shifting colors. What that means is that you have price that is shifted from below the moving averages to above. And we also have price that is neatly holding those moving averages. And we also have these moving averages neatly stacked as well. So all of those things will cause those candles to, shift colors. You can also see this green arrow right here. That is a moving average cross. So when you have a moving average cross, that's a trigger against the zone as well. Now, if you go to some higher time frame charts and you say, okay, well, what about the 30 minute? What about the 78 minute? We are seeing that trend shift on the 30 minute as well. You can see that you're getting a downside trigger here. So, sometimes you're going to have some conflicting signals. So this one is actually triggering that direction, which looks a little strange. Let me check something on that real quick. I think that does not look right. No, not in there. One moment. Just going to make sure that this thing is setting up properly. So what I'm looking for is I'm looking for this major buy. Just making sure it was set up the right direction on me. Well, I'm not noticing anything strange here. All right, anyways, I'll have to look into that a little bit later when I'm not in the middle of making the video, but I just want to make sure that signal is populating correctly. That is going to be a turbo VZO signal. Now, normally when you see that the volume is coming in, that arrow is going to be populating to the upside, which is why I think that one is actually an error. So I'm going to have to look into the code there. Because when you can see that the volume was oversold and it's shifting to the upside, that should be a volume breakout buy instead of a volume breakout sell. In any case, when you're looking at this chart, you can see that it's shifting on the 30-minute chart. You have a 30-minute squeeze. 78-minute chart is just now starting to shift. So typically when I'm looking at a swing trade, the 15-minute chart is going to be the first chart that's going to start to trigger, okay? Then after that, you're going to see a 30-minute chart. When you see that 30-minute chart trigger, that's going to be more of a confirmed trigger. It's really the 30-minute chart and the 78-minute charts that I really like to see for those confirmation upside triggers, okay? So, we got the 15-minute, we got 30, 78-minute is next. In any case, what this means is that that's a good zone. So, how do you project the target? Well, you just throw another fib level on there, and we're going to be back up into that 300, 315 price point that I was looking for in Tesla. Now, when you are trading earnings, it doesn't really go the direction that you want it to go. You just need to look at the big picture overall plan. Now, with Tesla in particular, let me just go ahead and erase these lower time frame levels. You have a situation where you're basically coming right up on this major area of resistance, okay? So it's 100% normal for a stock to be just a little tricky right around those zones, because what happens is you have sellers coming in at that level saying, oh, this is never going to get through it. The Cybertruck is so ugly. Elon's crazy. Whatever they're going to say, So you have some stickiness around that zone. You always have the higher likelihood that you're going to have chop and you're going to have pullbacks. But what you need is you just need a catalyst to break through that area. And that way you can be onward and upward, continuing on with the major patterns on the higher time frame chart. So when you're looking at the higher time frame chart, this is going to be a monthly chart. The pattern that I'm looking at is this. You see this major pullback here. You see this major pullback here. Do you also see how even without measuring them, those are almost exactly the same? And then do you see this rally right here? You see this rally right here. Do you see how that broke through resistance? Do you see this squeeze right here? Do you see the shift in momentum? Do you see the volume coming in? So, you know, this is a very bullish monthly chart pattern, okay? When you're on the way to completing this upside pattern, you're going to have some moments in time where, you know, you're going to be a little bit back and forth. But ultimately, in the quest of these upside targets, which by the way are going to come in with resistance around 350, and then ultimately target up here, previous highs 415, and then ultimately all the way up here at 500. So that's gonna, you know, not gonna happen overnight. If you look at Tesla right now, it's trading at 269. So, you know, if you look at where the market makers are pricing in a move like that, you know, you've got a $125 move going out into June of next year. So, I mean, it's not going to happen overnight, but that's what we're looking at for the long-term plan. Now, if you say, okay, well, I don't have the patience for that. Give me a trade for right now. The best thing that I have right now is a bounce off of this zone with a target up into 300. That's going to be a realistic shorter term target. And then once you get up into 300, 315, it's all about that area of resistance. So what can you do with it here? Well, on the trade up into that zone, we're looking at a market maker expected move of about $27 going into August. That's 25 days. You know, Tesla's known for moving more than the expected move, but you have to keep in mind this is like an estimate, right? So when you're looking at this, I think it makes sense to look at Tesla into 300 into August. Now, are we going to get it by August? Maybe not. We might get it by September. If you're going to be a little bit more cautious, September is much more likely because you have a $40 expected move by then. So, you know, the aggressive trader would look at this. The more conservative trader would look at this. The long-term holder would say, I don't really care. Let's just get there when we get there, right? But when you're trading options, you need to be a little more precise. So the way that I would personally set this up is I would use a butterfly. So I like to do my flies at the money just because it makes them cheaper and the risk reward is great. So I would set it up just like this. Buy 270 and then I would sell the 300s and then I would buy the 320, 330. So if you're looking at something like this, it's going to give you a $30 wide butterfly, okay? When you have a $30 wide butterfly, what that means is that your maximum profit is going to be $30, okay? That is the absolute most you could close your butterfly for, and in order to get that max profit, you would need Tesla to be trading pretty close to 300 around August 18th. Now, people always say to me, well, Danielle, that's impossible to get, you know, the exact target at the exact date. Well, I just did it on Friday with the Qs. It's not impossible. Do it pretty frequently, but you also don't need it to be at the exact target. All you need is for the price of the stock, which right now you're trading at 269. You just need for it to go over 270 and you need it to be in this zone. This is what I call the stock profits zone. So 270, 300, and then 330. So these are your strikes, right? So you have a long strike here, you have two short strikes here, and then you have a long strike here. So the idea with this kind of trade is that you're paying $6.47. The reason why you're doing that is because it brings down your cost basis of these long options. And then you're selling two at your target. Okay? Think of this like a dartboard. Your dartboard is up here at 300. Okay? This is the target. So if you make it in this area, you're still going to make money. It's if you make it right here is where you're going to make the most. So, as long as you get it on the board, ideally closer to the target as possible, the more you could make. The reason why I do this is because it brings down the cost, and because your risk to reward is usually like, I can get it 1 to 3, I can get it 1 to 4, just depending on what that looks like. So for example, 270, 300, 330. In this example, the max loss for one contract is $647, which, by the way, you do need a position size as though, you're going to lose the entire thing, because maybe I'm completely wrong and maybe we wake up tomorrow and Tesla is trading at 230, right? So, you have to keep that in mind. So when you're looking at this, you have a pretty solid risk to reward, because you're risking 647 and your max is 2,353. This is how you can really leverage your portfolio, and give yourself a really good risk to reward in the options market. This is also a defined risk strategy. You have one long here, 2 shorts and 1 long, so you're not naked anything. You do have those 2 short calls, but you have another long call here to protect you in the event of early assignment or anything like that. And I don't know, let's see if there's anything else I need to mention here. How would I get out? So that's another question that I always get. Now, there's a couple different things you can do. With something like this, targeting 50 to 75% of the debit is going to be the most conservative way, and that's going to be the way that you're going to get the most wins, okay? So you look at the debit you're paying, $647. Let's say you get out for $9, get out for $10. That's a pretty good conservative trade, okay? It's also much easier to hit those targets. You could also scale. You could try to get a little greedy. You can say, hey, I'm going to get 3 contracts, and my first one I'm going to get out at 50%. My next one, let me try to get 100%. My next one, let me try to just let it ride. It's another way you can do it. I personally try to use a combination of these factors. So I do try to, use time and the price target, which is 300. Try to follow it along. Sometimes it'll happen where, the price target, it gets hit just immediately. So let's say I put this on tomorrow, and then 5 days later, the price target's hit. Well, my options will still have 20 days to life. That is not a favorable situation with the butterfly, just because you're not going to make as much money. But if your target's hit and you made 25%, like, I just get out and take it and move on to the next one. Might even add another butterfly at a 330 price target, something like that. So, I think that I covered everything in this video. If you're wrong, you can put a 50% stop. Generally, depending on the position size, I will just let it ride, because I position size with the understanding that, it could be a max loss. So, take that as you will. If you're trading Tesla, you've already got to be a little bit on the wild side anyway, right? So just have to decide what is appropriate for your own account. But the moral of the story here is that, this earnings season, we already saw a bunch of stocks fall on EPS beats. That just means it's going to be a little tough market environment for the next couple weeks. Some of these moves may have already been priced in. The excitement is just not there. There's a lot of different things in the air, but in good news, when we see pullbacks like this in strong stocks that do have great long-term potential and solid uptrends, there are still a lot of post-earnings opportunities. So if you would like to learn more, make sure you comment down below. Let me know what you liked about the video. Let me know if you have any questions. Let me know if you hated it, anything like that. And I will make you some more videos. So I hope you have a fantastic rest of your evening, and I will see you next time. Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.